Can I predict the Bank of Canada's next big move before they even announce it? The Bank of Canada plays a crucial role in steering the Canadian economy. As the nation's central bank, it's responsible for maintaining financial stability, controlling inflation, and promoting economic growth. Think of it as the economic equivalent of a ship's captain, navigating through both calm and stormy waters. Its decisions have a significant impact on the lives of Canadians, from influencing the interest rates on mortgages and savings accounts to affecting the overall performance of the economy. The Bank of Canada is currently facing some tough challenges. Inflation has been a major concern, with prices rising faster than many Canadians can afford. At the same time, there's a risk of a potential recession on the horizon, which could lead to job losses and economic instability. The bank has to walk a tightrope, balancing the need to control inflation with the risk of slowing down the economy too much. Interest rates are a key tool in this balancing act, but the next move is far from clear. One of the biggest dilemmas facing the Bank of Canada is what to do with interest rates. If it raises them, it could help combat inflation but might also slow down the economy. On the other hand, cutting rates could stimulate growth but might cause inflation to rise even further. And then there's the option of holding rates steady, which could provide some stability but might not address the underlying issues. The bank has to consider all these factors when making its decision. The current economic landscape is complex, with global events and domestic factors all playing a role. The Bank of Canada has to take a close look at things like employment numbers, GDP growth, and inflation rates to get a sense of where the economy is headed. It's a bit like trying to solve a puzzle with many moving pieces. The stakes are high, and Canadians are eagerly waiting to see what the Bank of Canada will do next. The decision will affect not just the economy but also people's everyday lives. For instance, a change in interest rates could impact someone's decision to buy a house or invest in a business. So, what's the bank likely to do? If I had to make an educated guess, I'd say the Bank of Canada will likely hold interest rates steady for now. The economy is still recovering from the pandemic, and a rate hike could be too much to handle. At the same time, cutting rates might not be the right move either, given the inflation concerns. Of course, this is just a prediction, and the bank's actual decision could go either way. Data supports the idea that a rate hold is likely. Inflation has been coming down, and the economy is growing steadily. However, there are still risks on the horizon, and the bank needs to be careful. A misstep could have serious consequences for Canadians. The global economic landscape is also playing a role in the Bank of Canada's decision. With interest rates in other countries, particularly the US, also fluctuating, the bank needs to consider how its move will affect the exchange rate and trade. Looking at the indicators and considering the risks, a rate hold seems like the most likely scenario. But, as with any prediction, there's always uncertainty. The Bank of Canada's decision will have a ripple effect on the economy, and Canadians will be watching closely. In summary, the Bank of Canada's next move will have significant implications for the Canadian economy and individual Canadians. The key factors influencing the decision are inflation, interest rates, and the risk of recession. What do you think the Bank of Canada will do next? Share your predictions in the comments below. If you want to stay up to date on economic updates and analysis, be sure to subscribe to our channel for more videos like this.